It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, June 21st, 2016. Cruising our way through this fourth week of the month of June. Markets are giving us some fantastic moves this week. We're halfway through the two-day Janet Yellen testimony on Capitol Hill. We're inching closer to the highly anticipated Brexit vote on Thursday morning. Of course, today we got some big moves coming out of all the markets, and we got another exciting session planned for us tomorrow. Crude is bullish. E-mini S&P is sideways, range-bound, while the gold and euro are both bearish going into Wednesday's session. Got a great plan for you guys tomorrow. Got a bunch of charts to look at, lots of learning and earning opportunities. But remember, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. That'll take you over here to our blog where you can watch the full-length version of our nightly newsletter. While you're here, don't forget, if you're not a student and you'd like a free pass, come out and join me in the trade room as a guest. Grab your free pass. If you're not with me in the trade room every day and you want a free pass, upper left-hand corner, grab the free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register as a member of our mailing list. I'll send you an email every evening, Monday through Thursday evening, when the nightly newsletter is ready. All I need is your name, your email address, and then check your inbox. I'm going to send you a verification email. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Follow that link below the video and download those charts so you have them ready for tomorrow's session. And don't forget, you can learn the who, what, where, when, and why, everything that is being a member here at School of Trade. Join the trial membership on the right-hand side and learn more about how we trade and what it means to be a student here at School of Trade. And don't forget, I'm always here to help you guys out every step of the way. Use the live support button on the right-hand side of the chart. Hope you're having a great week so far. We're getting closer here to the Brexit vote on Thursday morning. Halfway through Janet Yellen's testimony on Capitol Hill. She looked a lot better. She looked a lot better today than she did the last time we saw her. I think they went a little bit easier on her. Maybe they felt bad for the situation last time. She kind of stumbled her way through the last speech that she did. A lot of real difficult topics they're covering right now in that testimony. So it'll definitely be another interesting scenario for tomorrow. We made it through Tuesday's session, June 21st. There is no news coming out of Asia, so nothing to worry about coming out of Asia. We'll go right into Europe tomorrow morning, and there's no major news coming out of the European session. So nothing in Asia, nothing in Europe. We're going to kick it off here with the retail sales from Canada. Now remember, big export out of Canada is the crude oil. So we know that those retail sales oftentimes will move the needle for crude oil futures. Be watching out for that tomorrow morning at 8:30 a.m. We'll then hop, skip, and jump down to a minor report at 10 a.m. for all the euro and gold traders tomorrow. The consumer confidence flash number at 10 o'clock. We have existing home sales, the big number tomorrow morning at 10 a.m. And of course, my gal Yellen gets back on the microphone tomorrow at 10 a.m. Remember, this is going to be the second half of her testimony, most of which will be just repeating what she said today, right, at 10 a.m. Do expect it to take a few hours tomorrow morning, and that means tomorrow is a very similar situation that we saw today. Either get to it early or get to it late. As you notice today, a lot of the markets that we saw today were big movers in the London and the first 2 hours of U.S. session. Then they went sideways for a bit, and then big moves to finish off the session. So either get to it early or get to it late tomorrow. We'll be in our trade room tomorrow morning at 8 o'clock Eastern Time. And we'll be watching, right, for 10 o'clock when Yellen's the microphone. Also, don't forget, for all you crude traders out there, one of my favorite markets, 10:30 a.m. is the inventory report. The good and the bad news about this is that the inventory report is going to pretty much get swallowed up by Janet Yellen's testimony. So, in all reality, it's pretty much a non-issue tomorrow. I will be interested to see, though, how this inventory reaction is tomorrow, because it's going to be coming right smack in the middle of her testimony. We get a big reaction tonight. I wouldn't be surprised if tomorrow's inventory number is relatively muted compared to what we usually see. But again, you know, it's definitely a major market mover for crude traders, and we know to be looking for that at 10:30 tomorrow morning. So major news on the schedule. Like I said before, same plan as it was today. Get to it early or get to it late. Trade around that 10 o'clock. Set your alarm for 9:45, 9:50. It will probably slow down significantly starting at about 9:30 into 9:45, and you'll start feeling that paint dry around 10 o'clock. Hopefully I'm wrong. Hopefully I'm wrong about this. But usually when somebody like Janet Yellen speaks, people listen, and the large block traders out there won't be able to take positions because they never know what's going to come out of her mouth. The good news is tomorrow's testimony will be much lighter than today's because a lot of people have already heard what she said today. So we're not expecting anything new out of her mouth tomorrow, and that hopefully won't slow things down as much. But again, plan stays pretty much the same. Get to it early. Get to it early or get to it late, right? Either get to it early in the morning or get to it early afternoon tomorrow. And you saw great examples of that in today's session. We'll then talk about the old Brexit vote coming out tomorrow night's newsletter. One more day here until we'll start worrying about that. And again, I talked about this last night. We are getting alerts from brokers right now. Euro, pound, gold futures, they're shaking up margins right now. I've seen emails come out from our brokers saying 3 times your trading margins right now. So make sure if you're a gold, euro, or pound trader, make sure you contact your broker, get more information on any particular changes they're making right now on their margins, right? We don't want to have any unexpected margin calls because you weren't prepared for it, right? Another example of why you need to be in communication, right, all the time with your broker. Make sure you sign up for their mailing list. Make sure they know your email address. Make sure you know who to call if you get in trouble. We talk about all this stuff in the beginner's course. In our beginner's course, we talk about the best practices of working with your broker and what you can be looking for. All right, let's jump right in. Crude, S&P, gold, and we'll wrap it up with a little bit of euro. Crude is bullish, yeah, just a little bit bullish, and trading with a large overshoot of the channel highs this evening, which tells the buyers to either look for the high of the channel as a support level for another leg higher or wait patiently for a deep correction back to the low of a channel for the most reliable buying opportunities tomorrow. As you can see, there's quite a bit of a bullishness on this chart. It all started off with this move after Yellen finished up, right? Nice strong move up, bought it up, and just continued. This, of course, this third leg higher is all based on news. And news is that 4:30 p.m. API number that comes out every Tuesday evening, right? Tuesday evenings, the 4:30 API. Wednesday mornings, the 10:30 a.m. inventory report, the DOE inventory. So this last third leg up, this is all based on news, which definitely tells us, well, they could look at this and just buy the pullback here, or this could come right back to basically where the news began, right, and look for more interest there. It's always a little bit of a variable. Remember, news-based moves, sometimes you can just delete the candles off the chart, right? A lot of folks will say, no, just ignore all of this stuff here because this is all basically news and just wait for it to pull on back. I always recommend wait for the market to tell me what to do next. So first clue here, looking at technical clues right now, we'll walk our way through this plan for tomorrow. First things first is the bull channel. Now this bull channel, what do we know about bull channels? We know we're looking for rotation. From the low up to the high, back to the low, up to the high, sorry about that, up to the high, right? And as you can see here, what should have happened didn't, right? We didn't get the balance, we didn't pull back to the low and then make the move higher. So we call this what? We call this an overshoot. Now this is a scenario that we see relatively frequently. I'm going to take the size of the overshoot, measure the size of the overshoot, bring that down below the low of the channel, and that's the anticipated overcorrection. I talked about this last week on the newsletter. We talked about it more last night. Whenever we have these just enormous overshoots, really one of two things is going to happen. Either buyers are going to buy this aggressively, right? Probably use the high of that channel, and we're waiting for that tomorrow. Or if they don't want it there, now this leaves it wide open for this big correction back down. And here's the problem. If we make this huge move back down, consistently bearish overnight, that's a nosedive that not many markets can pull out of. Whenever you see these big overshoots, you basically know one of two things is going to happen. Either one, we're going to pull back, use the top of that channel as support, and then up we go for a measured leg higher, right? We won't know where that's going to go until we get the pullback, but definitely look for the high of that bull channel. And really what you're looking for in this situation is a strong signal. And that means as it pulls back, I'm looking for that green candle. I don't want a green candle that looks like this. This happens all the time where we get these huge bull candles, in this case a bull market. These huge candles, I don't want to buy the high, right? So what I really want is I want to see it pull back and then give me something I can get in with a little bit of risk, right, and a large amount of reward back to that high, right? That's the scenario that you're looking for, right? That's the scenario you're looking for. Also, if it pulls back below the channel high, watch out because that becomes resistance. So it can definitely be a little bit tricky with this. So scenario one, it's obviously bullish, and you know that whenever we see a strong move in one direction, we're probably going to get another leg higher, right? Use the top of that channel as support. Whatever you do, just don't buy into the high, right? Look for it. Make sure you're not buying too high, but also make sure you're not buying too low either, because if it gets below that channel high, now that channel high becomes resistance, and now you're buying into resistance. The most reliable way to do this will be if we get lucky and we get a failure. Price makes a new lower low, sellers try to sell the pullback, they fail, and we can buy into their failure, right? Into their stops, above the high of the channel with enough room to get back of that high. Mwah, beautiful. That's exactly what we're looking for. That's the more aggressive, right? Most reliable, aggressive way to do that. I know, sounds like an oxymoron. But again, with such a strong move up, that's highly expected, right? It's highly expected. We need to wait, though, now and see what we get on the pullback. Now, if they can't get this price to hold, or if it sneaks below the low, right, the high of that channel, and it can't get above it, buyers are not going to want to buy into resistance. So then we're going to have to wait and look where price comes back next. Keep an eye on this area right here. Now, the ideal scenario, obviously, would be it comes back, hits the measured move support, and then we get a chance to buy the low. Hopefully it happens, right? But that's pretty much the ideal scenario. What is a little bit more likely to happen, though, is we're likely to pull back a little bit further, trap low, right? This area right here, trap low, and then back up we go, right? So the bottom line is we need to see rotation back down and then up, right? Remember, as it rotates back lower, sellers will try to sell it. You want to see them fail. That's your first clue. Seller failure into buyer strength. Buyer strength into pullbacks, and then back up we go for that classic two-legged correction into a double top, right, of that measured move. Now, let's play that game, though. What if it does? What if it does give us this huge overcorrection back down? This is going to be tough to pull out of this nosedive, because as it pulls back even lower and lower, right? Remember, the size of this overshoot is going to be about equal to the size of the overcorrection on the opposite side. Remember, I always talk about the pendulum swing. Imagine there's a pendulum right in the middle of that channel, right? So, of course, big swing up. It's not going to go back to the middle. It's going to swing all the way back down, right? It's going to overcorrect, right? Binge and bust, right? We look for that overcorrection. So when this price comes back down, this really is going to be the battle zone, that 49.63, 49.44. We saw a couple of examples of today where we came back down. The sellers tried to keep it below. They couldn't, and that's going to be your green light there if the sellers can't keep the price below it. If they can keep price below it, though, then we're going back into the trading range. We can see down here that trading range. That was the Yellen range that we saw during her testimony today. And, of course, that will be a target with a big objective coming down to that 48.85 being the low of day, right? So bull channel, big, right, big overshoot. Again, either buy it with the aggressive or wait for the correction. If it gets below and stays below the battle zone, then you know it's going to be almost impossible for those buyers to pull up out of that nosedive. Watch out here as this price pulls back. Talking about measured moves here right now. We get the first test of the triple measured move. Look for that two-legged correction back to a prior area of support, and then a double top up to that triple measured move. Classic scenario where we see a double top into that measured move. The double up, of course, is also going to be resistance overhead, but that triple measured move will be the big target. We get a big round number, obviously, we're trading through here right now as well. So just be careful as this thing pulls back here, right? If we do see it pull back to that big round number.